Okay, this audit is an audit of a lock mining lease agreement that the district has with White Rock Quarry. Little background on this contract or lease agreement was actually entered into all the way back in 2006. It was initially a 10-year lease with 3 5-year extension options. It's a 192-acre tract of land, of district land, and the actual mining operations, however, did not commence until December of 2015. Here's a picture of showing the location of the mine as well as an area of what it looked like at the time Google took this picture. It's located really right at the intersection of where I-75 intersects with the Turnpike Homestead Extension. There's actually, for the entire parcel, there's actually 3 different owners. And if you look at the color-coded map there, the green areas is what the district owns, which is actually about 25% of it. And then TIF, which is the trustee for the Internal Improvement Trust Fund, which is under the DEP at the state, owns the gold areas. And then the rock mining company themselves owns the blue areas. So the district actually only owns about a quarter of it. And the agreement is a 3-way agreement between these 3 parties, and the royalty payments are allocated based upon the percentage of acreage owned that each person gets for that. Initially, when the agreement was executed back in 2006, the mining company paid $75,000 a year through February 2009, and then that bumped up to $125,000 thereafter until the mining began. Then it went to a royalty payment. Now, however, the royalty payments, those payments from 2009, those prior to the mining, those were credited against the royalty payments until that was all used up with royalty payments. It initially started out at 95 cents a ton, but there's also an escalator index in there that's tied to, it's called the Construction Sand, Gravel, and Crushed Stone Index. That is an index that is maintained by the Federal Department of Labor. So it had gone up to, like, as of June 2018, it was $1.50. The agreement, however, says that it gives 2 options. Either it's based upon the lime rock sold during the year, or 90% of the tonnage that is actually extracted from the mine. However, there's really no way of actually effectively doing option A, because once the material is moved to the rock processing plant, it is actually commingled with material that they're concurrently mining out of other property that is in different mines. So, and there is no weighing or measuring of that. So that leaves us only with option B in this case. And that requires basically measuring the size of the hole to determine how much material has been extracted. Give you an idea, over the first 3 years in operation, it was almost $7 million. I think currently we're running them around $3 million a year. It'll fluctuate with basically the construction industry and the economy. Now the lease agreement requires the mining company, WRQ, to submit a annual survey of the mine and also an accountant's report. So of course, the objective of this audit was determined is the amount of money that we're receiving, the proper amount. And one thing that was a little different with this contract compared to a lot of district contracts, most of our district contracts have a boilerplate where There's an audit right in there to where we have the right to go in and audit anything related to the agreement. In this case, however, the agreement required WRQ to go and get their own engineering firm and accounting firm to provide their reports and assessments and provide those to us. So it didn't have the usual audit right.
Can I stop you and just
Yes.
ask you a clarification before you move on? Because I'll just lose it. Okay. So the lease allows us the right to perform an audit on site. And of course, they could audit it anytime they wanted. Are we relying on their audit reports, or are we also going in and doing our own audit?
Actually, your understanding was not correct. The problem is the agreement does not have that normal audit right in there
For us?
for us.
Okay.
But it does require them to hire firms, an accounting firm, an engineering firm, to go in and do their annual survey, audit, and provide those reports to us.
And Tim, I assume that's the same with DEP. They also do not have the audit right.
It's the same agreement because it's a three-way agreement,
Okay.
right? So let's see. So we reviewed the accountant's report, and overall, we basically were able to recalculate what numbers they came up with, and we were okay with the numbers. However, as in the accountant's report, it's all based upon the volumes and quantities that are in the engineer's report. And of course, the engineer reports basically says we have relied upon those numbers, but we make no representation as whether those numbers are, good or not, because obviously they don't have the expertise. That's an engineer's
So
expertise.
guys, hang on to this one statement, right? Because we'll come back to it.
Sure.
That we rely on something that when a report says we rely on this, but we can't verify it, and if it's wrong, we're held harmless. Those statements always bother me. You keep going.
Right. So based upon we basically recalculated and came up with the same conclusions. We were able to go to the DOL's website and determine that the PPI numbers and the escalators were, and the pricing was okay. So we were all okay with that. But once again, that's based upon relying upon the quantities in the engineer's reports. And but we did get the WRQ did provide us with the AutoCAD files, which we had a district engineer look at, and they were able to verify the quantities. Essentially, they go out and they use basically sonar equipment and so forth, and they measure the size of the hole. And the amount extracted will be the difference between what it was the last time they measured it and the new measurement. And that's how they come up with the number of yards that are extracted. And I'll come back to that one in a minute, but I just wanted to, there was one other issue where we noted they do an inventory adjustment, and cumulatively, this would amount to about $120,000. The agreement says that it's based upon what's extracted from the mine. So they pull it out of the hole, and it gets stacked on the side, and then it gets hauled to the processing plant from there. When we discussed it, there, however, was no provision in the agreement for an inventory adjustment. When we discussed it with WRQ management, it was their viewpoint that it's extracted when they move the material to the processing plant, not just pulled out of the hole and set on the side of the bank. Might be a reasonable explanation, but the bottom line was that an inventory adjustment is really just a timing difference. Eventually, we will get paid for that. At some point, when the mine has totally been completely mined, that inventory number goes to zero, and you get paid for that. And as far as from a, so it's a cash flow. It's a delayed cash flow that'll come in later. And most likely, assuming that price per ton will likely increase over time, we'll likely get paid at a higher rate, so that kind of gives us kind of like a sort of an interest built-in inflation.
And what's the life cycle expected of this site?
We asked them, they projected possibly about 10 years, but of course, it's all going to depend upon economic activity, because they basically mine based upon what what is needed and what the
Right.
market,
All things being equal.
or about 10 more years.
And it's been in operation for how long?
They've been mining for about 3-4 years now. They
So
started in 2015, so about 4 years now.
my numbers show that the next time the governing board votes on this lease will be 2021. The next time it comes back up for a vote to the governing board will be 2021.
Okay. So the bottom line is, we were okay with their explanation on the extraction and the fact that we'd eventually get paid for this. It was just a timing difference on the cash flow. Now going back to the engineering survey, is that because when we measure the size of the hole, you have to measure the volume, which is yards. But the pricing in the agreement is based upon tons. So you have to use a conversion factor between the weight and between the volume and the weight. So they provide us with, we asked them, how they came up with that conversion factor. They provide us with this engineering standard. It's called ASTM standard C29-29-09. The engineers are probably familiar with that. So we did check with our district internal staff, as well as we contacted a mine expert at DEP. They both confirmed that that was an appropriate standard to use in determining this conversion factor. And essentially, it's a process that's done in a lab. They have to take a sample every month. They take it to a lab, and they do whatever they do with this process, which you'd have to be an expert at that to know how they do it. But and essentially, the 1.3 is an average, because it will vary a little bit with each sample. So it's actually just an average of all those monthly amounts. They also provide us with information from like some of the surrounding ones that were not district properties, and that's adjacent to ours, and showing that it was about the same as what ours is, which you would expect being the same material in the same area. So this was, it would take someone with the expertise to be able to let us know whether this conversion factor is a good factor or not, and we really had no in-house expertise to do that. And what I did put in the report, and what we did do, is what I call a sensitivity analysis to show what is the impact if this is even off by a little bit. So for example, just a 1.4 versus 1.3 would have had about a $500,000 impact if it should have been 1.4 instead of 1.3, and possibly $3 million over the life of it. So this gives you a feeling for how important this factor is. Unfortunately, this is one that we were not able to actually provide any assurance on. I can't give you a conclusion on whether this 1.3 is a good number or not a good number. And so our one recommendation in the report was for management to consider whether getting some outside expertise and maybe doing a couple of these ourselves, or whether we can hire somebody with this expertise to go and accompany their people when they're doing these monthly tests to determine whether the standard is being appropriately applied or not. So other than that, essentially this audit it's a formula, and it was going through and getting comfortable with every variable in that formula. This is the only one I can't tell you whether it's a good number or not. So with that, I'll take any questions.
So they started, is it okay if I?
Yeah, sure.
They started in 2010, is that right?
2015, mine.
15, okay. So first, I think the district did a good job with this audit. I do have concerns, and I shared with you and I shared with staff that I have concerns about this very issue. I also think that it might be important for district, I don't know if we have the right to, but WRQ has hired an engineering firm to conduct that work for WRQ, which ultimately means that they are, and we're relying on their results. So have we audited, interacted with, do we have confidence and faith in Forden, Levy, and Skiles, Inc.? Do we know anything about them? Do we ever use them? Do we have confidence in the work they do?
Well, that's where it comes down to being independent. They've hired them, but you have to look at who they're working for, and who's paying the bill, and that's WRQ to do their services.
Yeah.
Now, hopefully, you'd hope they'd be independent and objective, but we can't.
But we're humans.
We're humans, and it's always that auditor skepticism.
Right, and so I told you when we went over this, I believe in the process of trust but verify. That doesn't mean that everybody is not trustworthy, but I believe that we're dealing with taxpayer money, so we verify. So my advice would be that we also look at that company just to make sure that there's someone that we would do business with. You know the process that we go through when we choose vendors to do business with. I would think that we would want to make sure that we had confidence in them. So they were hired for periods April 10th, 2016 through April 10th, 2018. Are we actually getting this information once a year?
Yes, we continue to get these once a year.
Okay.
And the payments, by the way, we actually get them quarterly. They give us an estimate each quarter, and then they do these at the end of the year, and then they true it up.
And I think it's very important that we hire somebody to verify that calculation for us, someone who has the background and the expertise and the experience. I think it matters. And then finally, my only other thing is let's talk about page 2. So the contract was off by 10 acres. And that,
Can you flip to page 2, Tim, please?
I think she's talking about on the report. I don't think I have that on the slide, do I?
yeah, so on the report on page 2, it says that an audit that you performed in 2012 identified discrepancies in the number of acres owned by the district in the leased premises. The lease agreement indicated that the district's ownership percentage of 25.2 is based on parcels totaling 192 acres. But in fact, the district owns 10 acres more than that, 2,002 acres. So if we had the acreage right, then our percent ownership would have gone up, which means that our percent profit would have gone up. We recommended that the district determine correct acreages and amend the agreement if necessary to reflect the district's ownership of the lease premises. However, the real estate leasing and support staff and parties decided to leave the ownership percentage unchanged, and upon completion of the mining acreage, WRQ has agreed to convey its parcels to the district. I might be okay with that. I might think that's great. But right now, I would like kind of data attached to it. So if the lease were changed, the lease agreement was changed to 202 acres instead of, and we got the credit for the 10 acres, what's that mean in the lease, the ownership percentage? But ultimately, what I'm after is what does that mean in money value?
Oh.
And then I'm almost done. I'm sorry, Tim, I know I talk too much, but I'm trying to do better every day. So ultimately, what I'm after is how many parcels are they going to give us? What is the value of the parcel? And how much money are we not receiving on a regular basis because we've made this decision?
Okay. First of all, let me give you a little background on why it was left unchanged. And based upon doing the audit and discussing this with staff, when they approached WRQ about doing this administrative, basically, modification to the lease, they said, fine, we'll do it, but we'll only do it if you do these other changes too. And those other changes were not acceptable to us. And so it was better to leave it, as it was, rather than accommodate the other changes that they were wanting us to make, that they were trying to use as leverage to make this change. That's why it actually was not changed.
And we don't have to go through all of it right now, and I'm not saying that was the wrong thing to do. I still would like to see exactly what that means. Because then the question becomes, well, if the number of parcels were not accurate in the original lease, then can they mine those 10 acres? Because I would think that that mistake may cause the lease to be not valid, or it certainly doesn't give them the right to mine the 10 acres that weren't accounted for in the lease. You see where I'm going.
Right.
I just don't like things that are like this, and I'm not here to make a decision on my own. I'm just suggesting things that we should consider.
Yeah, I put this slide back up because basically, if you look at, what the district owns, TIF owns, and they own, it's like a checkerboard. And so the only way to actually practically mine this was for the three parties to go together, because you can only mine like the entire block. So it really gets down to actually a paperwork calculation, because you can't mine this particular 10 acres because it's all part of one big tract that you have to do together.
Got it.
So those blue areas is what the mining company actually owns. So you really can't just mine part of it. And
No, I already knew that.
yeah.
But the acreage percentage was found to be 5% higher, right?
10 acres.
We can't
It-
attribute the size, the additional acreage to exact additional revenue, but obviously it's going to go up, not down. And if it is formal ownership of 202 versus 192, maybe I'm misunderstanding something. The reason that wasn't corrected in the lease is because you said there were other factors that were requested at the time to make that change?
Yes, by WRQ. And those, they didn't go into specifically what those items were, but they were apparently very unacceptable to us. It was very disadvantageous to us
Got it.
to accommodate those other changes that they wanted. They were trying to use this as leverage to force other changes. So,
Okay, we might want, I would suggest that maybe Paula takes a look at that lease, just from the ownership percentage. Maybe I'm missing something.
I think it's all about just coming back, it's a new governing board, and it's, maybe for me, it's about just understanding what does it actually mean, and then being able to feel confident in a decision based on what does it mean. It doesn't mean the sky's falling. It doesn't mean we're going to change anything. I just feel better making decisions based on hard data. That's all.
okay.
Thank you so much for your presentation. You've exposed us to this almost a year ago. I feel like I was exposed to this early on. And then and now, for some reason, it's just very odd to me that the South Florida Water Management District, no matter what their mission statement is, no matter what our mission statement is doing business like this for profit off the earth. So, it doesn't matter now. That's not what this meeting is about. But absolutely, it just seems, what are the relationships here? What is the history here? What was the money connection here? And are we doing everything right? And it's great to make, of course, the most amount of money, but I don't think this reflects the new governing board. So whatever it is, I am very appreciative of my very brilliant peers sitting to my sides, asking the questions that we make sure this is just right.
Okay.
Tim, can we, I just need a little bit more clarification. So you and I had talked about DEP and maybe leveraging them. Clearly, they have more at stake in terms of ownership and rights. And I thought you said that the DEP person that you contacted was somewhat in agreement with that conversion rate?
Well, they were in agreement that the standard was an appropriate standard to
At the
apply.
standard, but not the
Right.
exact, not where
Assuming that the
rate-
standard is appropriately applied.
Okay. So what the next steps then would be to, as we've talked about, get a bid or an estimate on whether that 1.3, is this correct?
Right.
Is the best conversion rate?
Right.
Okay.
And it would require some outside expertise to,
And all we're voting on is looking into the cost, not assigning a contract.
right, this is, because the recommendation is,
Yeah, let's go to that.
see, our recommendation is for management to consider whether they, and we use the word consider, it's not saying they do it, but to go out, explore the possibility, see what it costs, see what it take, and then they can make a decision once they have some numbers to determine whether they, whether it's worth spending the money to get some additional assurance, essentially, is what it boils down to.
Ultimately, here I go, cliche, at the end of the day. At the end of the day, in 2021, we vote on whether or not to allow this lease to go 5 more years. So it's not like we don't have control over the situation. Certainly, I'm not comfortable with anyone doing their own auditing and presenting their audit to us when money is involved. And you're right, we are not the largest stakeholder in this. The DEP is the largest stakeholder, which still comes back to the taxpayer as the stakeholder in a very big way. So I think that I don't need to say anything else. That's what I think. You got it. I'm not comfortable with this. I'm comfortable with what you've done, and I think you've done a really good job. I'm not comfortable with the situation, and I think that that staff now has some direction from us that we want you to look into it a little deeper and then come back to us and tell us that you're comfortable.
We appreciate those. I appreciate those comments. And the other thing we should also say is that we've looked into whether DEP has audited this. My understanding is not. They have not. Now, that's not a rubber stamp, obviously. So I think we're being more responsible from a taxpayer perspective and doing our job doing that. So we certainly have some follow-up items on this. Any other questions, comments from the committee or public comments? None? Okay. So let's call the recommendation to approve the audit of the Lime Rock mining lease agreement, not a recommendation, the audit of the Lime Rock mining lease agreement to vote, please.
I move to approve.
Thank you.
I'll second, please.
Thank you. All in favor?
Aye.
Aye.
Aye. Unanimous, not unanimous, or not anonymous, if I can get that right. Okay. Any general public comment?
Mr. Chair. So I just wanted to point out that that recommendation we are implementing, but we got a lot more out of this discussion to go and look at and bring back to you as well, so we'll do that.
Perfect. Okay. So with that, I'll adjourn. Governing Board workshop is going to be in about an hour today, and then the monthly meeting will be held tomorrow morning at 9 o'clock, right here in the same building. The next Audit and Finance Committee meeting scheduled for April 9th at headquarters. We are adjourned. Thank you.